Welcome, ladies and gentlemen, boys and girls, children of all ages, to this lesson on the National Bank. This is part 2 in a series of NOMEA lessons from unit number 7, and I'm Miss Jennifer Blank. I'm going to be your guide on this journey. Now, before I actually launch into a discussion about the National Bank, why do we even care about banks? I mean, this is a history class, right? This isn't an economics class, so why are we caring about banks? Well, I'm going to tell you why. Why do we care about banks? Because they handle our money. And we care about money because money makes the world go around. So we care about banks because banks handle our money, right? So banks handle our money. But why do we care about money? What is the big deal? Well, I'm going to tell you. It's the economy, stupid. Okay, so I'm not actually calling you stupid, but what I am doing is referring to a very famous campaign slogan from President Bill Clinton's 1992 campaign. He was having some trouble picking up steam in the polls when he was battling then-President George H.W. Bush, and his campaign manager wrote this on the whiteboard. It's the economy, stupid. The economy was in trouble, and so if you focused on the economy, voters paid attention because the economy goes at the heart of everything we do. Everything is about economics, and if you really study history for any length of time, you can trace virtually every historical event down to an economic cause. The economy is very, very important, and since banks handle our money and money involves the economy, this is why we care about it. So we're going to start our discussion with the first national bank. Now, the first national bank was in place right around our founding, and it existed from 1791 to 1811. Alexander Hamilton, who was the money guy at the time, one of our key founding fathers, he's the one who came up with the idea of a national bank in the first place. So we're going to start there. What you see in front of you is a timeline for the first bank of the United States. I got this graphic from the Federal Reserve, the Philadelphia Federal Reserve Bank to be precise. So if you want more information, feel free to Google and check out their site, and you can get this entire PDF and check it out yourself. But there are a couple of dates and ideas that I want to draw your attention to. The first one over here is 1790. Okay, and Alexander Hamilton, that's when he first proposed the idea of a national bank. And in 1791, that's when President Washington actually signs the bill. And then within the year, that same year, 1791, this is a big year, 1791, very important, subscriptions. Bank subscriptions actually go on sale. And I'm going to explain in more detail what subscriptions are, but think of them as stock. And stock is like pieces of a company. You buy and invest, and you own like a little piece of a company. So these subscriptions, these stocks, go on sale. And then they officially opened for business in December of 1791 in Philadelphia. Now, within that year, within 1791, 1792, you have several different banking branches that are opening up, so that's important. And then also there was a brief panic in 1792 that Hamilton was able to squash, he was able to quell, to put it down, partially through the national bank itself. So those are the key important dates I want you to pay attention for this. But I want to move this graphic down a little bit and show you some detail here. So now you can feel free to pause this video and read this entire breakdown for yourself, and I recommend that you do because it's a great explanation. But the portions that I want to draw your attention to are actually right over here. Okay, so ignore the IPO for a minute. If you're an economics student, you should go back and investigate that. But history students, we need to worry about that. This is the description of subscriptions or scripts, and that's what we're talking about here. So these scripts actually acted as a down payment on the purchase of a bank stock. So they didn't actually have the stock yet, and they didn't pay for it in full. It was like a deposit on getting a stock. So when they went on sale in 1791, they sold out so quick that many people didn't actually get to buy them. So a bidding war actually ended up happening. People who had the scripts, they were actually selling them for more than they paid. So there was this bidding war that kind of developed, and that bidding war is actually what caused the financial crisis of 1792 in the first place. So that's the interesting part here. So we had a bit of a bumpy start for the National Bank, but it was an important institution. It helped us pay down our Revolutionary War debt. It helped us organize our currency. So it was a very, very useful institution for the start of our nation. So as we said before in the previous slide, the First National Bank got off to a bit of a bumpy start, but it continued to grow. It actually grew pretty significantly. In 1800, it opened a branch in Norfolk. And in 1802, it opened a few other branches in 1805 in New Orleans. So it's doing pretty well. It's doing its job. And so in 1808, bank shareholders felt pretty confident about moving forward with asking for an extension of the charter. Unfortunately, that charter didn't go through, and in 1811, the bank actually closes down. But I want to give you a more detailed description of what the bank actually did, okay, what it was responsible for doing. And so I want to draw your attention to this paragraph right here, okay? It acted as the federal government's fiscal agent. Fiscal policy for economic students deals with money. It deals with taxing and spending, okay? So it collected all the government's tax revenues. It held on to the government's funds. It made loans to the government. It transferred deposits. It paid down the government's bills. So it was a very, very important institution at the time. This bank, as I said before, allowed us to pay down a Revolutionary War debt. It allowed us to consolidate that debt, to take the burden off of the states. So it was very, very important. All in all, it was a successful enterprise. So it was a good start to the nation's experiment in banking. At this point in our discussion, we're going to talk about the Second National Bank. Now, the Second National Bank was in existence from 1816 to 1836. And when you think Second National Bank, I want you to think President Andrew Jackson, because, spoiler alert, he's the one responsible for killing it. But I'll explain that story in a minute. Now, I'm not going to spend a lot of time on this timeline, but there are a couple of important dates I want to point out. 1816 is when Madison actually signed the bill, and he vetoed it several different times, several different versions of the bill creating the National Bank before he finally agreed to sign on to it, mostly because we were concerned as a country about regulating our currency. We still had a major problem with figuring out how to deal with that, and it was causing a lot of economic issues. So he finally signs that bill, and then in 1817, it opens up officially in Philadelphia. All right, in that same year, an additional 18 branches also open up. And then in 1823, this gentleman, Nicholas Biddle, becomes president of the Second Bank of the United States. But I want you to remember his name, because in a few minutes, we're going to spend a lot of time talking about him. His opponent in the bank wars is none other than President Andrew Jackson. Ladies and gentlemen, let's get ready to rumble! All right, so we have in one corner, we have President Andrew Jackson. There he is, Andrew Jackson. And then in this corner, we have Nicholas Biddle. Nicholas Biddle is over here. So Andrew Jackson is president of the United States, of course, and Nicholas Biddle is the president of the National Bank. So let's talk about what got this whole thing started. Well, first of all, Jackson didn't like banks, period. He didn't like them, especially a national bank, because he didn't like paper money. He had a bad experience as a private citizen with paper money, and it didn't work out too well for him. So he didn't agree with having paper money. He wanted to just have basic gold and silver and use that as the currency, because that was tried and true. It was sure. No matter what, you knew it was good. Paper money, not always the case. So personally, he didn't like paper money, period. Politically, he did not approve of the Second National Bank because he thought it gave the federal government too much power. He didn't like the idea the federal government could play with the currency. He thought that was too much manipulation of the economy, so he was not okay with that. Nicholas Biddle's philosophy on this doesn't matter so much. He was there to do a job. So if the Second National Bank goes bye-bye, there goes his job. So he was obviously in it to win it, to make sure the National Bank was able to continue to exist. So what got this whole shindig going? Well, first of all, 4 years before the Second National Bank was set to expire, its charter was set to expire, it petitioned for renewal to Congress. So Congress passed a bill a few times, actually, and Jackson vetoed them. And they didn't have the two-thirds majority to override the veto, so the charter wasn't renewed in and of itself. The other issue was Jackson decided he was going to starve the National Bank. So he removed all of the federal deposits that were in that bank. He removed them, took them out, and put them in what were called pet banks, into state banks that Jackson liked and Jackson backed. And so those banks are doing great. But meanwhile, when you take money out of a bank, you're basically like taking away oxygen from it. You're destroying its ability to function. So Nicholas Biddle thought, well, he's starving me of my oxygen. Why don't I turn this around on him? I'll fix him now. So he started calling in all these loans from people in an attempt, and he stopped making additional loans in an attempt to try to create a mini panic, hoping that would prove to people that what Jackson was doing was wrong and that the National Bank should be supported. Well, unfortunately for Nicholas, it backfired on him. What actually happened was that Jackson was supported by this move, and people blamed the National Bank for the problem problems with the economy and blamed it on an administrative problem. They said it was Nicholas's fault that all of this happened. They couldn't manage money properly. So this spelled the death knell of the national bank, and of course, as we know, it ended up dying out in 1836. But this is the quintessential battle between the national bank, and there's the breakdown. So just like we learned about on the last slide, a request was submitted to Congress in 1832 requesting a renewal of the bank's charter. Jackson vetoed that bill, and so the bank was not rechartered. In 1833, that's when the bank war really began, because President Jackson, it was at that point that he ordered all the federal government deposits be removed from the second bank and deposited in state banks, also known as pet banks. And then in 1836, because of all the ridiculousness that was going on, in 1836, a second bank, its charter expires, and it officially closed its doors. Now I'm going to give you a down and dirty breakdown of panics, recessions, and banking crises in less than a minute. The ones that we're going to focus on here are going to be the Panic of 1819, the Panic of 1837, and the Panic of 1857. The Panic of 1819 is important because it's the first major financial crisis in the U.S. It was a worldwide crisis, and the Second National Bank was partially to blame for this. They basically contracted their lending, and this credit or lending contraction caused bankruptcies, which then caused foreclosures, bank failures, drop in real estate prices, slump in agriculture and manufacturing. So that was bad. In 1837, there was a what's called a bank run. There was a run on the banks because people wanted gold and silver in exchange for paper money. And because the banks were illiquid, they didn't have that gold and silver, they failed. And this crisis was fueled in part by people not believing in the validity of the nation's currency. And in 1857, we have a collapse of the Ohio Life Insurance and Trust Company. There was a bank panic that followed in the fall, and more than 5,000 businesses failed during the first year of this panic. So what did we learn? We learned about the First and Second National Bank. We learned about the purpose of banks and that of the National Bank, and that was to serve as the fiscal arm, as the taxing and spending arm of the United States. It allowed the federal government to consolidate the Revolutionary War debt, the First National Bank did, and it allowed us to manage our money, collect taxes, do things of that nature. We learned about the bank wars during the Second National Bank. We learned that Andrew Jackson was the victor there, and Nicholas Biddle was snuffed out. No more Nicholas. He went bye-bye. Jackson won that war. We also learned about a couple of important economic panics, recessions, and banking crises. We talked about the Panic of 1819, where the U.S. was kind of sucked up into part of a worldwide crisis. We learned about the Panic of 1837, and that was because banks didn't have enough gold and silver to give out in exchange for paper money. And we learned about the Panic of 1857, which resulted in the closing of 5,000 businesses. I hope this deepened your understanding of the National Bank. I hope you learned what you need to, and I will see you next time.